Hello and welcome to CNBC-TV18's Mumbai Newsroom. I'm Sumaira Abdi and you're watching MF Corner. Joining us today, we have Joydeep Sen, who's a corporate trainer and author, and he's going to talk about what's really going on with debt funds these days. You know, returns have been muted. What is the outlook? Should investors be considering it now? Or is there still status quo with regards to your fixed income investment? So we'll ask him all of those questions. Joydeep, thanks very much for joining in. So first, I want to ask you the broad trends. What are you picking up in terms of, what's the latest with debt funds?
Hi, Sumaira, and greetings to all the viewers. So yes, I'll talk of three broad aspects to start with. One is the AUM, which is the money under management or assets under management. Then the performance, which you said is muted. And thirdly, the portfolio quality. Now, starting with AUM or the assets under management, to give you a bit of history, starting with say March of 2020, like 2.5 years ago, the AUM was rupees 11.5 lakh crores, which is rupees 11.5 trillion. So March 2020 was 13.8 trillion, a little higher. March 22, they said was similar, 13.8 trillion rupees. But now in July, it dipped a bit to around 13.3 lakh crores. So why so? What happened? So this thing that happened is subsequent to RBI rate hikes, the bank deposit rates are increasing. So investors have another alternative, somewhat better rates than earlier. And secondly, as you said, the returns have been muted. So that has been impacting investor sentiments. So these two reasons combined, yes, there's a bit of a drag on assets under management, but yes, gradually things will pick up. The data I gave you was for the usual debt funds, apart from FMPs and target maturity funds. Now talking of performance, as we said, it has been muted. To give you some numbers, I'm giving you the category average, that is the average of schemes in that category. Over the last 2 years or so, from end of July 20 till end of August now. Category-wise, liquid funds have given about 3.5% annualized. It is the regular plan, the distributor plan. Banking PSU funds have given 3.71% annualized. Corporate bond funds have given 3.8% annualized. Dynamic bond funds lower at around 3.44%, and gilt funds the lowest, 2.52%, because gilt funds have a longer portfolio maturity and longer variability. Now, to put it simply, these numbers, 3.5 or 2.5%, are lower than bank deposits. So obviously, investors are not happy, and that has been a drag on debt funds. And the third aspect is the portfolio quality. Now, if you look at the broad allocation to AAA, AA, single A, 2 years ago in July 20 and now, I don't have the numbers offhand, but yes, broadly, the portfolio quality has improved. And yes, to elaborate a bit further, why have returns been muted? So over the last 2 years or so, yield levels have been moving up. And why has that happened? RBI rate hikes, that has commenced now, that is May of this year. But the market works in anticipation. So over the last 2 years or so, in anticipation of RBI rate hikes, yield levels have been moving up. So that has happened. That has impacted bond fund returns, impacted adversely. But at the end of the day, the portfolio YTMs have improved.
Okay. So, Joydeep, what's keeping a lid on returns, and, how long do you expect that returns might remain muted?
Yeah, so this is the juncture. Things will improve now. Now, why do I say so? So what has been happening over the last 2 years or so is that while YTMs have been moving up, the adverse mark-to-market has been a drag, as yields have been moving up. But as of now, it is almost already in the price. So RBI has hiked rates by 1.4% since May of this year, and RBI will hike more, maybe 50, 60, 70 basis points more. But it is almost in the price, which means from now on, yield levels will not react much, which means from now on, it will be a more or less steady state kind of returns based on the YTM or the net accrual level of the fund. So things will improve now. Let me give you some numbers as to how much the YTMs have improved. Comparing with July of 2020 and July of this year, we will look at the uptick, as in how much yields are.
When we come back on the other side of this energy emergency in America, we've got one and abroad. Brian Sullivan has the latest on two big stories moving the oil and gas markets this morning. Plus, we're going to talk to the White House's point person on energy issues right after this.